The review into the Reserve Bank. It is the most significant look at the central bank since the early 1980s Campbell Review, which helped pave the independent way of the Reserve Bank. The review will be conducted by three people. Caroline Wilkins, the former Deputy of the Bank of Canada, now on the Bank of England's Monetary Policy Committee. Renee Fry-McKibben of the ANU's Crawford School, considered to be one of the most foremost macroeconomists in Australia. And also Gordon de Bruer, who is economist and also the Secretary of the Public Sector Reform. Treasurer Jim Chalmers said this is not a witch hunt about the Reserve Bank's performance, but the review will certainly analyse decisions made by our central bank before, during and after the pandemic-induced recession. So let's go to the Treasurer today.
I don't want this to be all about taking pot shots at the Governor or the Board. I don't want it to be primarily about second-guessing decisions that the Board has taken, particularly in the recent past. Obviously, the history is part of what the review panel will consider, but their focus, certainly my focus, is forward-looking to make sure that we can give the Reserve Bank the best combination of institutional arrangements to help them make the right decisions going forward.
So let's bring in here some of our guests for today, the economists who have called for this review. Peter Tulip, Chief Economist of the Centre for Independent Studies, but formerly an economist for both the Reserve Bank and the US Federal Reserve. And also Warren Hogan, independent economist and formerly Chief Economist with the ANZ and Principal Advisor to Australia's Treasury. Peter, can I start with you if that's okay? You wrote papers. You are part of the group of economists that called for this review. Are you pleased with what you've seen today?
We're delighted, Ross. It's broad, it's deep, they've got good people and a good mix of people. So it ticks all the right boxes. OK,
so Warren, what about you? Is it going to actually change the way in which business, in which really the community at large understand the way in which interest rate decisions are being made in this country?
Well, it may. It remains to be seen. I'm sure there'll be a lot of coverage of this. I think the terms of reference are very good. I think they're, as Peter said, broad and relevant. I think, though, that the fact that they've gone with three leads rather than just one, I think it's a shame that they chose three sort of public policy academic economists and didn't include a banker in that, because after all, it is a central bank. And if you're going to have three people on it, I would have thought a senior Australian banker would have had a lot of value to add. OK, just one thing, Peter. Can I ask you, do you think that the Reserve Bank Board and the Governor actually wanted this review? They've certainly come out and welcomed it today, but initially, do you believe they wanted it?
I suspect they did not. I thought that they were doing a great job and they were filled with self-congratulation and didn't see a need for external review. They're not saying that publicly, they're welcoming it, but that's not the RBA culture. The RBA tends to resist external engagement, and this is very engaging externally.
Well, one of the big issues that's going to come out of this review is quite clearly going to be all about inflation targeting, just where that inflation targeting should sit. Now, inflation targeting in Australia right now is between 2% and 3%. We know that. So let's go to the Governor, who gave a speech today, and really let's hear from him about what he thinks the inflation targeting could be or should be in the future.
In most other countries that have under-reviewed their inflation targeting arrangement, they've come to the conclusion that a flexible inflation target centred somewhere around the 2% mark is the best we can do. I don't want to prejudge the conclusions of the review, but I think that general conclusion that flexible medium-term inflation targeting is the right monetary policy framework, I think that's a pretty robust conclusion. If the review panel come to a different conclusion, we'd have to assess that and discuss it with the government at the time. But my view is that flexible inflation targeting, while it has some limitations, is the best monetary policy set of arrangements for Australia, and we'll look at how best to implement flexible medium-term inflation targeting.
So Warren, sounds like he's quite happy to actually have a flexible arrangement, almost telling the review perhaps that's what the conclusion should be.
Well, he's not holding his view back. And look, I tend to agree with him that inflation targeting remains the right way to go about it. The question I think has to be addressed is the 2 to 3% inflation target set up in the early 1990s the right thing to still have. And the reason I ask that is that it is higher than the rest of the world. Now, there were excellent reasons why they went with 2 to 3% back in the early 90s, but they have to ask, are those reasons still relevant today? I don't think they are. I think we need to align with the rest of the world. And interestingly, the Bank of Canada representative in the review, Caroline Wilkins, I think the Bank of Canada's target of 1 to 3% is the right way to go forward. So it'll be interesting to see how that plays out.
Because that's one of the issues as to why this review was called. Why you, as you know, of many called for the review was because for 7 years before the pandemic, before the recession, the inflation rate was below the target and the Reserve Bank did nothing. So this is the question about the efficacy of the Reserve Bank, whether it has actually acted in the best interests of the Australian economy.
Warren's questions are important and interesting questions that the review should answer and address, but I think they're secondary. The problem is that the Reserve Bank doesn't hit the targets it's got. So changing the targets, what's the point if the bank's going to ignore them? We need to somehow change...
Isn't that what they call a flexible target?
We need to change the governance structures of the RBA so that it actually hits a target before we worry about what that target's going to be. Otherwise, they'll just ignore it.
So what you're saying here is that the Reserve Bank is reactive, it's not proactive. And we've seen that really in these latest rate moves where the rest of the world is well ahead. It's anticipated inflation well ahead as what the Reserve Bank here in Australia has.
Yeah, I think the Reserve Bank got very badly burnt by the experience prior to the pandemic, where they were continually expecting inflation to return to the target. And so they did so many bad forecasts, they wanted to wait till they saw it in the data. And they waited till it was really obvious, which was too late.
All right, one other issue that's going to be really important is going to be the issue of where the neutral interest rate is, the cash rate. Now, you know, we know that, say, for example, in New Zealand last week, they indicated that now they believe their rate at 2.5% is contractionary. It's actually starting to slow its economy. Here, yesterday, they weren't so certain as to where the neutral rate was. Well, today, the Reserve Bank governor came out and gave a pretty big hint as to where he thinks the neutral rate for our cash rate is.
Thinking, 2.5% is our rough estimate, or at least 2.5% of the neutral rate. So at some point, I imagine rates will get to at least that level. How quickly we need to get there, and indeed whether we need to get there, will be determined by the inflation outlook.
So a couple of things, Warren. 2.5% he thinks is the neutral rate. They want to get there fairly quickly. That's giving a pretty big tip as to where interest rates are going in the very short term.
I think that's right. I think he's told us that he wants to get it to 2.5 quick smart. I think quick smart means by the end of the year. So that's interesting. But I actually think this issue, this debate about the neutral rate, is one that should always be had. And I think the Reserve Bank Board should be publishing their estimate of the neutral rate, broadly speaking. Is it between 2 and 3? I think this is something that should come out of the...
Right, and the one last one I want to show you before we go very quickly, and that is the Prime Minister today. He was interviewed and asked about all of this. Here's what he said about interest rates.
The Reserve Bank will make its decisions based upon their assessment of where the economy's at, but they need to be careful that they don't overreach as well. Of course, the Reserve Bank declared a while ago, and they've conceded the error, that interest rates would stay at the extraordinarily low levels where they were for a period of years up to 2024, and that hasn't been the case.
So, Peter, the way I read that is he's saying you made mistakes in not raising interest rates quickly enough. You made mistakes in telling people that rates weren't going to move until 2024. Don't make another mistake now.
Yeah, I think people exaggerate the recent mistakes. Remember that Jim Chalmers called for a review before inflation took off, over a year ago. So the reason for this review is not to look at the recent mistakes, embarrassing as they've been, is to look at longer-term problems.
I've got to say thanks for your analysis today to Peter Tulip and also to Warren Hogan. Really appreciate the insight. It certainly is an important day, no doubt, for the Reserve Bank as well.